it's interesting to me the way that when the debt level gets to a level at which it cannot be serviced anymore without additional underlying money supply growth, because it is a Ponzi scheme. You've got to, when you take out new debt to spur growth, you need to create more money to service the interest and payment on that debt. And there's a great chart that's on my thread if you go back a few months, and I've done it in a lot of other podcasts where I show it's a chart by Dan Oliver at Mermican that shows that at any point in time when the money supply hasn't grown enough compared to the debt level, something breaks and then they print. And so the chart shows in 2008, that's exactly what happened. And of course, they had a big print then. It took a few years and it was $3 trillion. But what we do know, or what I believe with high certainty, because the lines have now crossed again, the base money supply has not grown fast enough to support the debt level. And the chart shows that. What I believe with very high certainty is that at some point they have to do another print. And if the pattern repeats, it'll be bigger than the last one. So we did 3 million in the first one, trillion. 3 trillion plus in the first one, 5 trillion plus in the second one. So this one's probably going to be 7, 8, 9, 10 trillion.
The global system is starting to crack under pressure, and this time it's not just about markets. It's about geopolitics, energy, and a financial system stretched to its absolute limit. After peace talks failed in Pakistan over the weekend, the Donald Trump administration is preparing to enforce a blockade on the Strait of Hormuz. Iran has already responded with warnings, making it clear that this situation could escalate at any moment. Oil has surged back above $100, and the ripple effects are already spreading through the global economy. What we're watching right now isn't just another geopolitical flare-up. The Strait of Hormuz sits at the heart of global energy flows, and any disruption there sends shockwaves through inflation, interest rates, and risk assets. Markets are reacting in real time, energy prices are climbing, uncertainty is rising, and investors are starting to reposition for what could be a much more volatile phase. At the same time, beneath all of this, a much bigger issue is building. Global debt levels have reached a point where the system itself struggles to sustain them without constant intervention. Every crisis, whether it's war, economic slowdown, or financial instability, has historically led to one response: more liquidity, more printing, more expansion of the money supply. And that's why today's conversation is critical. In a recent interview, Lawrence Lepard lays out a scenario that sounds extreme on the surface, yet follows a pattern we've already seen play out multiple times. If the system breaks again, the next response won't be small. It could be the largest monetary expansion in history. Lepard envisions at least $10 trillion being pumped into the markets to keep things steady, a move that will have an immense impact on Bitcoin and crypto asset prices. Before we go further, take a second to like the video, subscribe to the channel, and let me know your thoughts in the comments. Are we heading into another major liquidity cycle or something much bigger? Drop your comments and let's get into it. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time.
There are times when you wonder, if there aren't some crazy actors in this whole drama, and if somebody doesn't go rogue. I mean, certainly a nuclear exchange would be a very, very bad thing. And
Lawrence, have you ever modeled out what you think would happen to markets if a nuke is fired either by Israel or?
I have. I'm pretty sure we'd see everything down, 50 to 75%. Almost immediately. And that the printing would follow, and then probably the currency would fail. And we'd, potentially have to move into kind of a, eat what you kill kind of mode. I mean, I think we'd probably survive, but there would certainly be millions of deaths in certain places where people were unable to be, get fed or have water. It's somewhere you just don't want to go. So I hope and I pray that we never go in that direction. As you point out,
because some people.
No, go. You go.
Yeah, some people believe, like, people have kind of mapped out their understanding of the world. I've laid out my map of the understanding, but some people believe like Israel rules the world. They'll blow up a nuke. They'll kill the US empire, and somehow they emerge as like a world power, which I think is completely, it just doesn't face. I don't see that as reality.
So I grew up in, duck and cover drills in the United States. I mean, I still believe in mutually assured destruction.
Yeah.
And that what prevents Israel from nuking Iran or the U.S. from nuking Iran is the knowledge that China and Russia can nuke us. And I think, I hope and I pray that, what we learned from the illegal dropping of the bombs in World War II is that, this doesn't end well for anybody, and these can never be used again. And so I still believe that's the base case, absent, a madman getting in there. And I think there are enough checks and balances on the madman. I mean, I think that, let's say Trump were crazy enough to call for a nuclear strike. I'm guessing his military wouldn't let him do it, that they would stop him. So and I don't think he's that much of a madman. I think he's a buffoon, and I think he's an idiot, but I don't think I don't think he wants to die. So, I think I'm pretty much broadly aligned with your vision of how this plays out. But there could be some more stupid moves between here and there. I mean, I read the stuff about the potential. This is a grab of the fissile material, and Trump likes playing with these toys, and he's got Hegseth in there egging him on, and he's got Bibi egging him on. And it wouldn't surprise me if, we have to lose some soldiers, which is, tragic. It's like the school kids, which, I mean, I don't even know. Do you have any view on whether or not there was a double tap going on there? I mean, some say there was, some say there wasn't, that they hit the school, and then when all the parents and first responders got there, they hit it again. Do you know if that's true or not? I don't know.
I think it's hard to say what is true, what isn't true. We're in the fog of war. I've been following every second of it. I have opinions, but I try to stick to what is the bigger picture of where this is going. I think when I get into the micro details and start speculating on them, it can go a little bit funky because there's just too many.
It's too hard to tell.
I do think we'll know the truth eventually, but is it beyond the US military, the Israeli military, to do insane crimes against humanity? I think everyone got the answer from watching Gaza.
Yeah, I think that's absolutely right. Yeah. So it's, the whole thing is incredibly tragic and, incredibly scary and hurtful. I mean, I've got kids in their 20s and they're scared. And I'm like, look, this is, cooler heads will prevail. The world's not going to end. But, you're watching the reordering of great powers, and, this shit is messy. It's extremely messy. And, in a Twitter or true social age where you've got a president who, uses, behaving in an unhinged way as a negotiating tactic, it's going to trigger a lot of people on both sides, and I mean, God knows I got people on my thread on Twitter, saying he's the second coming of Christ and you have to do this. And, they killed 45,000 protesters, which we all know is a lie. They killed some protesters for sure, but were those protesters, provoked by Mossad? Maybe. And, the propaganda on both sides is pretty bad. And I just, in general, I mean, while I don't, love the Iranian regime or the Russian regime or even the U.S. regime, it's these great powers fighting over each other. I mean, I think the average human being in the world just wants to live safely, raise their children, live in peace, and do constructive shit. But sadly, psychopaths exist throughout society. And further, sadly, a lot of them seem to figure out how to get into politics and positions of power. And so that combination, creates a lot of misery for other people, and death. And it's just incredibly tragic. And it goes back to something you and I have as a core belief. And I know you were in it in 2011. I didn't buy my first one until 2013. But I wrote the book because I truly do believe that Bitcoin fixes this, which I know a lot of people claim is incredibly naive. But, imagine a world where government can't print money and the only thing that has real value cannot be destroyed. There's nobody who, I mean, let's take a look at this war. Let's say, Trump just put the defense budget up to 1.5, up from, under $1 trillion. If you divide that by the number of American families, I mean, you're telling every American family you're going to pay another $5,000 or $10,000 for this war. Nobody would agree to that. I mean, they say we're struggling to get by right now. We can't buy gas. We can't buy groceries. I'm not paying another $10,000 to have this war. And yet that's what we did. Now, we didn't do it through direct taxation. Of course, we did it indirectly because they'll print the money to pay for it. So, it's a really, really broken system. And as I'm sure you know and understand and believe, I mean, we were at one of those fourth turning inflection points where, sadly, it's got to get worse, so that we all rise up and kill it in so much as we ever can, and move back to a system that's a lot fairer. And I think that starts at the monetary layer, and that's why I wrote the book.
What Lepard outlines here goes beyond just market volatility. He's pointing to a world where geopolitical tensions and financial fragility are feeding into each other. The risk isn't limited to one region or one event. A major escalation, even a worst-case scenario, would trigger a massive collapse across global markets almost instantly. Liquidity would vanish, confidence would disappear, and policymakers would be forced into emergency measures. At the same time, he emphasizes something most people overlook. These systems don't fail quietly. They fail in a way that forces intervention, and that intervention always follows the same path. When pressure builds to a breaking point, authorities respond with liquidity injections on a massive scale. The bigger the disruption, the larger the response. That dynamic sits at the core of how modern markets function.
Obviously, everything they're doing is extremely expensive. And it's interesting to me the way that when the debt level gets to a level at which it cannot be serviced anymore without additional underlying money supply growth, because it is a Ponzi scheme. You've got to, when you take out new debt to spur growth, you need to create more money to service the interest and payment on that debt. And there's a great chart that's on my thread if you go back a few months, and I've done it in a lot of other podcasts where I show it's a chart by Dan Oliver at Mermican that shows that at any point in time when the money supply hasn't grown enough compared to the debt level, something breaks and then they print. And so the chart shows in 2008, that's exactly what happened. And of course, they had a big print then. It took a few years and it was $3 trillion. But then, they tightened up in 15 and 16, and Yellen and Powell did their best. And we came into 19 and repo blew out and Powell had to pivot, and bingo, very conveniently, the scamdemic arrived, and we had to shut the whole world economy down, and then we had to print another $5 trillion. And so, my suspicion is that what's coming is another one of those. I don't know if it's based on a war, it's based on the debt markets collapsing. I mean, we don't know how it's been written up and orchestrated, but what we do know, or what I believe with high certainty, because the lines have now crossed again, the base money supply has not grown fast enough to support the debt level, and the chart shows that. What I believe with very high certainty is that at some point they have to do another print. And if the pattern repeats, it'll be bigger than the last one. So we did 3 million in the first one, trillion, 3 trillion plus in the first one, 5 trillion plus in the second one. So this one's probably going to be 7, 8, 9, 10 trillion. And, that'll keep the system functioning, but it will also lead to, inflation like we just had. And the first one created, inflation of financial assets because they sanitized it. They started paying interest on excess reserves, and so it didn't creep out into the economy. And so all the financial assets got, inflated, but we didn't have as much CPI inflation. The second one, the pandemic, they literally printed money and sent it out in stimmy checks, and the size was larger. And so M2 ballooned 40%, and we had huge inflation. And my sense is this one's going to be even worse. So, to me, we live in an inflationary area. I know from listening to Simon's prior podcast that, he believes the only two assets that are going to protect you in this world are the only two sovereign non-controlled forms of money, and those are gold and Bitcoin. And that's exactly where I am, in self-custody in both cases. I know he's exited all his other equity investments. I still have equity investments in gold and silver miners because I run a legacy fund and I have clients. And so that takes a lot of my time. But actually, I intend to ultimately wind away from that and get out of that business as well, primarily because, you've got management risk in those companies. And, this is, in my view, this is actually going to be a pretty chaotic period. And, I don't want to go full mandibles, on everybody, but I think people need to understand that, things could get kind of messy and ugly in society, in terms of haves and have-nots, and food and water and everything else. And so some of the thoughts that the preppers have with respect to, preparing for the future, so to speak, don't seem, stupid or far-fetched to me. I mean, I think that, I hope and I pray that, we don't get into a situation where everything's really that bad, but it could be pretty ugly. I think at a minimum, I think as a best case, and I was hoping we don't have a World War III, and I don't think we will. As a best case, we just get through this with a currency failure, with the dollar more or less effectively failing, and everybody realizing why it failed. It failed because the government was out of control, couldn't stop spending money, and we transition. I've said in prior podcasts, I think probably the timing is about perfect for President Saylor in 2032. And he comes in and he says, look, I've got the receipts. I understand how it all happened. Here are the mistakes we made. We built a great world up until 1971 or 1946 or 1913. I mean, generally speaking, the world operated and made a lot of progress on the gold standard. And Bitcoin is digital gold, and it's better. It's easier to verify, move, etc., store. And we are going to return to a Bitcoin standard. And here's how we're going to do it. We're going to devalue all this debt and start over again. And so my grandkids will be paying for things in Satoshis. I mean, that's kind of where I think we're going. But, between now and 2032 is, that's a long 7 years or, 6 years. So, it's, and a lot of bad shit can happen, and probably some of it will, sadly.
Lepard's core argument is simple, and it's rooted in history. Every time debt levels outpace the growth of the money supply, something breaks. In 2008, the response came in the form of trillions in stimulus. In 2020, it was even larger, with direct injections into the economy driving inflation to levels not seen in decades. Now, with debt even higher and the global system more fragile, the next response could dwarf everything that came before it. Right now, the market is starting to reflect that tension. Bitcoin has already pulled back, dropping nearly 4% over the weekend as uncertainty around the Middle East intensified. Options data shows traders are increasingly positioning for downside protection. There's clear fear in the short term, driven by rising oil prices, tightening financial conditions, and the expectation that central banks will remain cautious. Higher energy prices feed directly into inflation, and inflation keeps pressure on central banks to hold rates higher for longer. That environment tends to suppress risk appetite across markets. It creates a difficult phase where liquidity tightens, volatility increases, and assets like Bitcoin struggle to find direction. But that's only one side of the equation. The other side is what happens next. If the system reaches a breaking point, if growth stalls while debt continues to rise, policymakers are left with limited options. Historically, that moment has always led to aggressive monetary expansion. And if Lepard is right, the next wave could be in the range of $7 to $10 trillion or more. That level of liquidity doesn't just stabilize the system, it reshapes markets entirely, and that's where the long-term thesis comes into focus. In a world where currencies continue to lose purchasing power, assets that cannot be printed or controlled become increasingly important. Lepard's conviction is clear. Gold and Bitcoin sit at the center of that shift. The short term may remain volatile, driven by geopolitics and macro uncertainty, but the bigger picture points toward a system that eventually leans even harder on liquidity, and that's the environment where Bitcoin has historically thrived. The real question isn't whether volatility is coming, it's how markets respond when the next phase of liquidity begins. If you made it this far, you already understand this isn't just another market cycle. We're potentially looking at a turning point for the entire financial system. So here's what I want to know from you. Do you agree with Lawrence Lepard? Are we heading toward another massive money printing cycle, or does this time play out differently? Drop your thoughts in the comments. I read all of them. And if you found value in this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss what's coming next. Thanks for watching.